Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined by Hailey Orr in MUFG's Capital Markets Strategy Group. It's Wednesday, January 26, 2022. Welcome back to the podcast, Hailey.
Thanks for having me today.
Good to have you back. And in today's episode, Hailey is going to give an overview of MUFG's Capital Markets Strategy 2022 Global Markets and Economic Outlook.
I'm happy to get started and talk about our 2022 Outlook presentation today. The piece focuses on the regime change underway in the economy and markets and the remarkable level of corporate activity taking place as company strategy pivots to investing for a post-COVID world. To set the stage, in 2021, we had a remarkable recovery in both economy and markets, which was really allowed for by the remarkable rollout of the COVID vaccine. As many of you are already aware, there were nearly 9.5 billion doses administered across 184 countries in 2021. And what that set up for is a regime change into a mid-cycle recovery. And on the economic and policy side, we see this in a growth deceleration. We were at a 2 to 3 times growth rate in most companies, 2 to 3 times the long-term normal growth rates in 2021. And as we look at 2022, we expect growth to be more desynchronized and we expect it to decelerate in most regions, though still largely above trend. We also expect a shift from multi-year persistent low inflation to the inflation that we're seeing currently in the US, which is at 40-year highs, and has broadened beyond the non-COVID impacted sectors. We do anticipate that some of these inflation pressures will abate in the back half of 2022, but certainly something the market is laser focused on in the next couple of months. Additionally, we see this labor market dynamic shift. We are now in an environment of low unemployment, low layoffs, record high quits rates, and rising wages. We do expect this trend to continue. During the COVID crisis, 2.3 million people left the workforce. And we do think that a large proportion of that 2.3 million are people who will be permanently out of the workforce, either from early retirement or for other reasons. Most importantly for markets in the coming weeks and months is the global policy shift to tightening. During the 18 months of the COVID crisis, the first 18 months, we saw 32 trillion worth of global fiscal and monetary stimulus. And we're seeing a shift to tightening on both the fiscal and monetary front. From a fiscal perspective, in the US, there was 7.5 trillion of fiscal stimulus in response to the COVID crisis. We are now facing a significant tightening, and we're going to start to see and hear this term fiscal cliff becoming more relevant to the market. The key deadline for us to look out for right now is February 18th. That is the date when the existing continuing resolution to fund the US government ends. And we do expect that in the course of February, we will see another continuing resolution. We also expect some more stimulus in the United States, though in a much smaller form than we had last year. We do expect the Build Back Better bill, which was being drafted over the course of 2021, and in October of 2021, looked to be about 1.75 trillion in size, will be significantly scaled back, but will still be a policy priority for the White House and for Democrats in Congress. We expect the ultimate bill to be in the range of 500 to 700 billion, and will largely focus on climate and healthcare related tax provisions. Now, from a monetary perspective, and this is, particularly topical today with the Fed meeting and Fed meeting announcements just hours away, we do expect to see a global monetary policy shift to tightening. China this year is the only major global central bank that will be easing its monetary policy. In China, of course, we have already seen a lot of the economic slowdown take place. And so China has shifted its policy towards easing more rapidly than others. In the US and across the rest of the major developed economies, we do expect a tightening posture from central banks. All of this sets us up for the regime change in markets, and we've seen it vividly in the last week. We are expecting structurally higher volatility throughout this year. This compares to the last couple of years when central bank policy was really suppressing volatility. We do expect rising interest rates this year. Markets are pricing in 4 to 5 25 basis point hikes this year. MUFG's baseline expectation is for 3 hikes with quantitative tightening in the back half of the year. In credit markets, we ended 2021 with spreads in both high yield and IG markets close to multi-decade tights. In 2022, we do expect modest spread widening, though I want to emphasize that funding markets are still wide open to corporates. The final regime change that we focus on in the presentation is the transformation of the global financial system in the forming of what we're calling greening the financial system. Last year, we had over 1 trillion of new sustainable debt issuance, and we've seen over 42 trillion of global assets under management with a dedicated ESG focus. That number is growing rapidly, and this is going to be an intense focus for shareholders in the year ahead. Throughout the COVID challenges and the regime change in markets, corporate strategy has been remarkably adaptive to the environment. And so we're really seeing a lot of corporates move out of the COVID period from a position of strength. Corporate balance sheets globally grew 1.6 trillion, and they now have about 7 trillion of cash and cash equivalents on hand. At the same time, corporate revenue, earnings, and margins are all well above historic averages. In 2021, earnings growth for S&P 500 companies was 45% year on year. Of course, this is off of a very steep decline in 2020. We do expect that to normalize over the course of this year, but still at a very high level in the 9 to 10% range, which is well above pre-COVID averages. Similarly, profit margins in Q3 of last year were at 13%, which is above the 5-year average of 11%. Corporations have demonstrated a remarkable ability to adjust to changing business environments, and we expect that adjustment to continue and that strength to continue. From this position of strength, we have already seen a level of corporate activity that is nothing short of remarkable. Buyback and dividend activity reached record levels in Q3. We do expect that rapid pace to continue throughout the course of this year. And some of these market pullbacks and bouts of volatility we see will present buying opportunities for corporates as they buy back their stock. On the CapEx front, we are currently in the strongest CapEx cycle we have seen since the 1940s. Companies are making investments in innovation. In the US, spending on software, information processing, and R&D reached 9% of GDP. And similarly, M&A activity reached a record level in 2021 of 5.5 trillion. That's a global figure. We're seeing transformative M&A and what we are calling scope transactions as corporates look to adapt new services and new technologies. In 2021, technology represented 20% of global M&A volumes. That's a significant increase from the 20-year average of 13%. So you're seeing corporate M&A, you're seeing corporate CapEx, we're seeing investment in more resilient supply chains, and we're seeing a significant investment made in ESG and carbon transition technology, the so-called green CapEx. Through all of this in the course of the next year, we do expect funding markets to remain resilient. There are strong technical factors at play, over 250 trillion of AUM on hand at global investment funds. From a fundamental perspective, the US high yield net debt to EBITDA levels reached 3.4 times in Q3. That's below the pre-COVID 5-year average of 3.7 times. Defaults are remarkably low at 1.2%. We do expect those to rise over the course of this year, but will remain well below the cyclical 6% rate, which indicates the start of default cycles. Finally, the piece looks at the new era of big government. And what we look at in this last section of the presentation is the more interventionist government policy, which often occurs after economic crises. What we address in this section is the causes and implications of policy deglobalization. This will include more regulatory activism, more scrutiny of cross-border investments and transactions. We also look at infrastructure investment and the way and size of infrastructure investment that we see on a global perspective. Finally, we address the investment in climate transition that will be a focus of both global and US government policy in the years to come. One final point on the US front as it pertains to taxes. There are three important tax provisions that either expired on January 1st of 2022 or will expire on January 1st of 2023. These extensions to these tax provisions will be priorities for Republicans in Congress, and so we do expect them to get quite a bit of airtime this year. The first is the debt interest expensing calculation, the movement from EBITDA to EBIT in that calculation. The second is the upfront expensing of R&D. And the third is the 100% bonus depreciation allowance. Look for bills with extensions for these three provisions to come in the coming months. I mentioned before the Build Back Better bill that will be scaled back, but as it is going to pass through the reconciliation process, it will still be very important for Democrats in Congress to find pay-fors. And so as a result, we do believe there are a couple of corporate tax provisions that are on the table, namely a corporate minimum tax around 15%, as well as an excise tax on share buybacks around 1%. We think it is less likely to see a full-size increase in the corporate statutory rate, and we also think it will be challenging to increase the overseas GILTI tax rate. We go into far more detail on all of these topics in the 2022 outlook. Please take a look and reach out to us with any questions.
Thanks, Hailey. And again, I would echo Hailey and really encourage our listeners to check out the 2022 Global Markets and Economic Outlook, Transitioning Corporate Strategy for a Post-Pandemic World. And if you aren't receiving MUFG's capital market strategy reports directly, please do reach out to your MUFG sales coverage or get in contact with Hailey directly. Great stuff as always. Thanks again, Hailey.
Pleasure to be here.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.